I'm Megan Roberts, Ag Economist at Compeer Financial, and I am joined once again by Ben Duncanson with our Legislative Affairs team. How are you today, Ben?
Oh, I'm doing all right. Hello, everybody.
So there is, as we probably say every month when it comes to Washington, D.C. and agricultural policy, a whole lot going on. But we thought that we would start out today on July 30th when we're recording with maybe the hottest, freshest information, which is from the Federal Open Market Committee. Welcome to Compeer's Ag Edge, brought to you by Compeer Financial. In each episode, we break down complex agricultural economics, policy dynamics, and farm business topics into conversations that make sense for your operation. We're here to help you stay informed and confident about the trends and decisions affecting your agricultural business. Well, yesterday, the Federal Reserve concluded their July Open Market Committee meeting, and the results were, for maybe the first time in a couple years, something that was very difficult to predict ahead of time. Oftentimes, when I head into the days before a Federal Open Market Committee FOMC meeting, I know what they're going to decide. Like, no one truly knows until the press conference and the press release, but we have a pretty good suspicion. This one was a little bit more challenging. So heading in, the market was leaning probably about 2/3 no change to the Fed rates target range and 1/3 towards a change. What's a little bit interesting about the way this all came out in the end is that was almost what the vote split was for the voting members of the Federal Open Market Committee. So they went 9 voting for no change, keeping the target range for the federal funds rate at 3.5 to 3.75%. And then we had 3 voting members that did prefer to raise the target range by 1/4 of a percentage point or 25 basis points. And so they dissented. And when you think about kind of those market odds heading in and then where the committee actually voted, the market wasn't actually too far off in terms of that split. But we do know that they have made no change to the rate. And then market interest rates over the last day have sort of digested that information. On the short term, they've headed down a little bit lower in terms of where the bond yields are for short-term bonds. And then on the longer term side, a little bit more of some wariness there. And that just has to do with how the Fed is approaching inflation. And one of the reasons why there was some suspicion that there would be the potential for a hike was just where we are sitting on inflation. We are at a continuation of some higher inflation. The June personal consumption expenditures index was at 3.7% annual growth. And as a reminder, the Fed's goal is a 2% goal for inflation. So we're quite a bit higher, although June was lower than May. So Ben, before I ramble on any longer about that, any thoughts or perspectives from your side of the DC expert, so to speak?
Well, it was pretty interesting. One of the things that you commented on was that the Fed continues to look at PCE, which is something that Mr. Warsh did comment on in his press conference after the fact. That still, as he is new into his chairmanship, as he likes to remind us all, that is still the Fed's preferred measure of inflation. However, he did say that there are several other measures that him and other members of the committee are looking into. So it was pretty interesting to see. I know you and I have talked about this offline in the past, but the task force that were set up originally to kind of see whether the Fed is tracking the appropriate measures seemed to be on progress, which was kind of an interesting little piece of news. And I'm suspecting we'll hear more about those work groups, task force, or what have you, as we continue on into the summer and into the fall. Megan, one of the interesting things that continues to be present here is the chairman keeps on getting questions about the openness of communications. Maybe going back to a little bit of our old friend Alan Greenspan, where communications were a little bit more limited. I don't know if you want to opine on that and kind of your thoughts and kind of just the general communication strategies of the Fed and how that may be trade.
Yeah, I won't opine too much on it, other than just to remind folks that this is only our second meeting with Kevin Warsh as the new chairperson of the Fed and of the Federal Open Market Committee. And we had a long time with the prior chairperson of Jerome Powell. So there is certainly a difference in communication styles. The press releases, just to be like really tangible, the press releases look very different. There is a difference in the question and answer style in some of the press conferences. And so we're just learning a new style of communication. And it does look like this is going to be a bit less open. That does make it challenging for someone like me, who I'm not trying to predict, but I'm certainly trying to educate and provide commentary on where rates might be going in the future. And I'm gearing up for possibly having a little bit less information as we move forward, just based on these last two meetings. I do want to get to finish up my opining. I do want to get to kind of like the nuts and bolts, which is just, we are very much looking at, in the current term, a higher for longer rate environment. And that is just the practical nature of all of these economic data points and what the Fed is doing and trying to read all the tea leaves. I do think it's fair to say at this point, with inflation where it's at, whether it's a short-term shock or a stickier bout of inflation, is looking like we're in a higher for longer rate environment.
Yeah, and it looks like the news of the day has crept its way into the Open Market Committee. I know there were several comments about them continuing to monitor the ongoing conflict in Iran, as well as maybe some increased tariff pressures on there. So we will see what the news of the day brings. And as always, it tends to slip into the numbers and into the boardroom.
Absolutely. And as short as the new press releases are, the conflict in the Middle East, that's a direct quote from the press release, supply shocks, energy sector price increases, those are direct quotes from the press release. So we do know for certain that the Fed is considering those current events in our decision making. Let's head over to other policymakers. So let's move out of monetary policy and over to fiscal policy, which is Congress. That is in your domain, Ben. Tell us where we're at in terms of kind of the end of the summer session for the House, and then as we move into the August recess with the Senate. Ben?
Well, if we do stroll down a little bit down the mall to Capitol Hill, you will not find our friends in the House. They have all left for the end of the session. Before they left, though, speaking of fiscal policy, there was some pretty interesting things that they were able to accomplish. Finally, after several weeks of not being able to get a rule to get votes on the floor, they were able to come together and actually get a rule passed. And they were able to get a lot done in a very short amount of time. One of the big things that folks will continue to hear about is the House started the process for what we're going to call, for lack of a better term right now, Reconciliation 3.0. Which again is the mechanism that allows them to make changes to the federal budget, not policy changes, but spending changes, and avoid that 60-vote threshold in the Senate. The House was able to push forward on its reconciliation instructions to the Senate. Also included in that, and we'll get back into what's included in the reconciliation bill, but also included in that was a CR, a continuing resolution to keep the government funded until the end of the year. As a reminder, like many things, September 30th is the end of the fiscal year for our friends in Congress. So in order for them to, and given the state of appropriation cycle, we will continue to monitor whether that CR takes place or not. A little bit of a difference of opinion on the Senate, which we'll get to in a minute, but what was included in the House reconciliation bill was kind of interesting, and one thing very important for agriculture. And that was the overall package was about $95 billion, with the majority of that funding going towards both the Defense Department to replenish arms that have been used and other munitions that have been used in the conflict in the Middle East, as well as the intelligence community to get them a little additional funding. But for us in agriculture, it was actually a $12 billion included as part of this package that was originally requested by the White House and was communicated to our friends in the House of Representatives. What it was included in that $12 billion is $11 billion in economic assistance and $1 billion for disaster relief for some particular storms that happened, and mostly in the southern half of this country earlier this year. So that has made its way through the House of Representatives and is waiting on the Senate to take action on that. There is a little bit of a cooler reception towards this package in the Senate. One of the things that we continue to watch is whether Leader Thune decides to include that CR in the reconciliation package, whether he can get that voted on its own or what have you. There's also several provisions around voter security that was included in the House, basically funding for states to implement some form of voter ID. That has a little bit of a different take in the Senate, so that will, it's something we'll continue to watch as it goes along. But the Senate will continue to work on that as we get closer into fall, most likely when they return. They are leaving after the first week of August for the August recess, but they'll be back in September before the end of the year. So we'll continue to monitor what continues to go on. However, there is, as we start to think and closer to the end of the year, from September 1st till the end of the year, there's only 28 days in which both the House and Senate are in session. So they have a lot of work to do, not only funding the government, lifting a debt ceiling, also passing the National Defense Authorization Act, the highway bill, and for us in ag country, the farm bill continues to be one of the things that we continue to focus on as well. As a reminder, the House has passed its version of the Farm Bill, and we did get news out of the Senate as we speak, and this is, again, subject to change, as all things in Washington, D.C. are these days. We do think that next Thursday, we will see a markup in the Senate of their version of the Farm Bill. Not a lot of information other than that what was included in the chairman's discussion draft that was released about a month ago now. So we'll continue to monitor that, especially because we expect that we'll start to see finalized text in advance of markup, possibly as early as next week. So we'll continue to keep an eye on that. On all things, Senate has a little bit of a different opinion too. E15, which is an issue for all of us that we continue to monitor. We will see how that ends up in the Senate. As a reminder, that passed on a standalone vote in the House, but they ended up transmitting it, fancy DC term for sending it over, to our friends in the Senate. They actually combined it, the Farm Bill and E15, when they sent it over to the Senate. So we'll continue to monitor how that package develops in the Senate. We don't suspect at this time it will move alongside the Farm Bill. It may move as a standalone. It may be packaged with the Farm Bill and everything else at the end of the year, just depending on what the timing looks like and what the vote count looks like. But we do expect further action on E15 as well as the Farm Bill, especially on the E15 side of things. As for Leader Thune, that is a priority for his home state of South Dakota, and a pretty big one at that. So we'll continue to monitor this. And as a reminder, folks, even once the House and the Senate pass their own farm bills, you can't have two different versions of law, so they'll have to conference at some point before they send it to the president's desk. And after the conference, it has to go back to each chamber and get voted on again. And so that's one of the things we'll continue to monitor as well. Also out there, just to let people know, the Senate, as they don't have a full enough plate the way it is, also has a lot of appointments that they're hoping to get done between now and the end of the year as well. And with maybe some changes in politics, maybe some chances that some chambers will fit, we do expect what is called the lame duck session after the election, but before the Congress adjourns at the end of the year, to be historically busy at this point. So for all those Hill staffers, hopefully they'll get you out of there before Christmas so you can be at home with your families. But it looks like we might be going down to the wire again. before the end of this Congress. So, Megan, before any other questions, what else do you think people want to know?
Well, I mean, there's just so much there. And it's, I think, really right now, kind of the question of end of the year, fiscal year, what can they and what must they get done before September 30th? Then the post election and what has to get done before the end of the calendar year. And I think a lot is going to get punted into that time frame. But that's kind of the difficult nuances. What's end of the year fiscal year versus end of the year, the calendar year, and so much going on there.
Yep. And just a reminder, in case this happens, but hopefully not, if they're not able to extend the Farm Bill by the end of the fiscal year when it expires, they do have a little bit of leeway in those couple of months between the end of the fiscal year and the end of the calendar year before we hit the dairy cliff and before we go back to pre-existing law, which, again, the power of the Congress, they can retroactively pass something like they met their deadline. So we'll continue to monitor that as well, but not to catch people's hair on fire if they don't have a extension by the end of September. We are fine until the end of the year.
Yep. It's more about funding the government before September 30th. And then for a Farm Bill, the real bad deadline or real good deadline, I don't know how to say it.
It depends on if you have dairy cows or not.
Exactly. December 31st. So any other major policy considerations, or should we head over even further down the street in DC to USDA?
Yeah, we're just bouncing around the Capitol Mall today. So let's head down to USDA because I know there's a couple reports that you're going to keep an eye out for going forward that you'd like to talk to people about.
Yeah, absolutely. So the classic monthly report, certainly in agriculture, would be the World Agricultural Supply and Demand Estimates. July is the most recent report where we have the data in front of us. And July typically is not the most interesting report of the year because we have the acreage report at the end of June. We covered that in last month's episode because that's the big news of the two reports in that June, early July. The acreage report, the stocks report that comes out on June 30th tends to have a little more information. And then the July WASDE just confirms it. And that's a lot of what we have seen. There's maybe a little bit of some news on the corn stock side and maybe some bullishness there, meaning some positivity potential on just where we're ending up with ending stocks and overall use. But the July report for both corn and soybeans did not change any of the season average farm price projections. So USDA held tight to their earlier in spring projections for the 26-27 crop, with corn at $4.40 per bushel and our soybean price keeping at $11.40 per bushel. So on the USDA WASDE side, prices very consistent. I would not say that's the case when we move out of USDA and look at what's going on the futures market. A lot more volatility. We've had some new contract highs for, in particular, soybeans over the last month. So if not a lot is going on in this WASDE, why are we having this variation in futures prices? And some of that has translated also over into the cash market because futures prices and basis have combined to make some stronger cash market prices over the last month as well. Well, hopefully I'm setting this up really well to argue that part of that is another USD report, and that's the crop progress report. So there's just been some concerns about overall condition of the crop. And for the most part, in early to mid-July, the crop progress report was not showing that there was a significant degradation of good to excellent conditions in corn and soybeans. But this last Monday's report did finally show some change in the overall good to excellent. So let me run through some of those numbers, and then maybe that will make the case as to why the futures market has been a little bit variable as they're trading on weather, and then also some geopolitical concerns and energy concerns. But first, let's look at crop progress. So this past report from Monday, and that would be Monday, July 27th, just to timestamp us, is going to have good to excellent corn conditions at 63%. So as a whole, the majority of the crop is still looking really good. And Ben and I, before we got on to record, were mentioning just how good where we happen to be the corn crop does look. So there's certainly pockets of amazing corn conditions out there. There's also some areas that have been really challenged by weather. And so as we look at that, last week compared to this week, we had a 4-point negative, meaning 63% good to excellent this week. Last week, we were at 67%. And that's a pretty significant drop for the USDA in a crop progress report in just 1 week's time. If we compare back to last year, remember corn last year, that bumper yield that we saw well into the high 180s per bushel nationwide on average. At this time last year, the crop progress report showed 73% good to excellent. So we were already trending below last year, and then we had, in just 1 week's time, a 4-point decline. Similar story, but maybe a little less significant on the soybean side. So soybeans this week, we are at 63% nationwide, good to excellent. Last week was 66%, so that's a 3-point change. And then last year we were at 70% good to excellent. And it was a good year last year for soybeans, but not quite as exceptional as on the corn side. So the market seems to be incorporating some of the crop condition and weather concerns. There is a lot of the planting season left, so we will need to continue to monitor where this is moving forward. And what will really end up likely being a more pivotal WASDE as compared to the July is going to be the August. And that is often the case on an annual basis. But I think certainly this summer, just as we're trying to figure out where exactly is this crop and trying to move from anecdotal stories to having a really good idea of what the true nationwide picture looks like, I'm going to be keeping an eye on the August report and where and if they change the per acre yield estimate, and then if there's any adjustments in that farm level season average price for corn and soybeans. But a lot going on there. And there were also other things going on, not just weather, which maybe leads us to our last topic then, geopolitics.
Well, just before we get on to that,
okay.
I know I spend a lot of time driving across our service territory of our 3 states, and you do see a lot of variation in the crop out there as well. Do you just want to give a little bit more detail on why this August report is a little bit different than some of the other reports as well?
Yeah, absolutely. I hinted at this a little bit that there's anecdotal stories about where the yield and conditions are versus a little bit more of a scientific and kind of true data-oriented approach. And in August, we see the continuation of traditional sources like surveys, and we add in on top of that at the USDA some satellite imagery, and it really is the report that starts to get us a closer picture of where the 2026 yield is going to end up. Now, those yield adjustments are going to continue throughout the fall and winter season, but August gives us that often market moving picture.
Thanks for explaining that, because I know there's a lot of folks out there that receive those surveys. And just a reminder, folks, they are important for you to fill out. So please, if you are selected, fill out that survey and help your friends at USDA out and have them have a better estimate of the crop as well. And I guess one of the other things we'll keep an eye on is the Pro Farmer Crop Tour, also coming up in August.
Absolutely. So in addition to these USDA sources, we are going to see yield estimates coming out of a variety of other sources as well. And that helps to create a more clear, comprehensive picture of where we might end up for this growing season.
Yep. Okay, Megan, let's bring her on home. You wanted to talk a little bit of geopolitics. So what's on the top of your mind?
Well, I can't say that these price moves can be looked at through solely a weather only focus. Since we talked a month ago, we have had a wide variety of different current events, and the energy markets have become quite a bit more volatile. And so it is very difficult, I think, to determine exactly what part of every market move is weather versus war premium versus a consequence of energy markets bringing up or down all other commodity prices in a given trading day. But there certainly is, in my opinion, a multitude of different variables at play.
Yep. The world's not getting any simpler by this the day goes on. So we'll continue to watch things as they continue to develop. And hopefully we'll see some more consistency in the markets and a little bit less variability. Makes it a little bit easier for folks to plan without that variability. So hopefully we'll see a little bit of calm down in some of those markets. So
Yeah, and in some regards, I think one of the areas where we have seen at least markets not react as much in the last week or two as they would have a year ago would be on the tariff side. So that's another geopolitical factor. And last Friday, so this would have been July 24th, we did have a new set of additional tariffs that were announced. These were for a replacement, though, of a prior set of additional tariffs that had just expired. The Section 122 tariffs from back in February had a 150-day countdown clock to expiration. That was July 24th. And so when the new Section 301 tariffs came online on Friday, the market just sort of shrugged it off because while they were new, there was almost some certainty there because we have lived with these additional tariffs now for a good portion of the last year in some fashion. And we had lived with the replacement ones since February. So even though it's not a consistent necessarily policy in terms of the section of tariff law that's being used, there was some consistency in just expecting that this was likely to be happening during last week, and likely not one of the factors that was a major push up or down on commodity prices last week.
yeah, in addition to that, Megan, there was also some additional tariffs that were leveled, weren't there? In addition to the ones you referenced earlier?
Yeah, so there was one segment of new tariffs from last week that were a little bit more surprising, offering a little bit more market uncertainty, but they have not gone into play yet. There is a delay, and we may or may not see this come to fruition. But for the time being, there has been a 50% additional tariff announced via a mechanism called Section 338. It dates back to the 1930s. And this would be on a wide range of Canadian goods, which does include some ag products, but not things like potash imports, for instance. So we'll have to wait and see what happens with that. But that would be a tariff announcement that perhaps would result in more market uncertainty than some of those other ones that I announced, which were more of the quote unquote, I guess you could say same, because those were just replacing something that was expiring.
Yep, and we'll continue to monitor that as USMCA talks continue going forward and see whether those tariffs will take effect or something will change between now and then. It's Washington, D.C., and in my experience, a lot of things change rather rapidly. So we'll keep an eye on all of this.
Absolutely. So, Ben, in order to wrap this all up, you know how I love a fun fact.
Ooh, I like
Fun
this.
fact. Okay. So I have been diving deep into corn and soybean acreage amounts since the June 30th report. I just was getting ready to do a number of presentations. And so I really wanted to dive into those USDA numbers. And I found a kind of interesting statistics over the last 10 years. While individual corn and soybean amounts have varied both on the yield side and the acre side, as a combined total, meaning corn acres nationally plus soybean acres nationally, that total has not varied much at all over the course of the last decade plus. Really, once we got through the ethanol transition, the 2012 drought, we've been pretty close to one particular number. Do you know what that number is?
I don't.
Okay. Well, you weren't supposed to. Like,
Good.
It wouldn't be a fun trivia fact if, like, everyone knew it. That would just be an obvious fact then. It's 180 million acres. So
Wow.
we can go higher or lower on corn and soybeans. And I'm telling you, that is a huge focus in ag economics. If you're in a role similar to mine, like we try to figure out where's corn and soybeans going to go. But that total, it tends to remain at 180. This one you might know. Do you know what one year in the last decade plus was the outlier on that?
Oh, gosh. I don't know. I really don't.
2019. And when I tell you why, you're going to know why. You're going to think it's obvious.
Well, let me kick myself then.
It was prevented plant, but it's getting to be a long time ago. But if you think back to the 2019 planting season, it was a lot of acres that just didn't get into the ground. So if we hadn't had that, that likely would have been 180 million acres as well. There you go. That's my fun fact.
I think I struck that from my memory, so thank you for the reminder.
Yeah, so that's the thing is, like, I try to forget about 2019 planting season because it was so bad and just long. So you are forgiven for not remembering that particular spring.
Thank you. I think it's better for my mental health that way. So.
Yeah. And with that, we will end you there. We've covered everything from the House and Senate to the Federal Open Market Committee and USDA crop progress reports. And if you remember one thing, I guess, from this episode, is that we plant 180 million acres of corn and soybeans in the United States.
There we go.
Thank you for listening to Compeer's Ag Edge. You can follow us on Apple Podcasts, Spotify, or your favorite podcast app. For more agricultural finance insights and resources, visit Compeer.com. That's COMPEER.com. Until next time.